Always a consideration for investors. As we approach year end, what kind of changes can we expect in 2021? For more, I want to welcome in Rebecca Walzer. She's the president of Walser Wealth Management, to give us her take on what to focus on as the Biden administration takes office. Welcome to the show, Rebecca. Glad to have you back here. This is taxes, right? We all love paying taxes. It's something that we need to do, and we all love doing it. But what are your expectations going into 2021 with a new administration coming into play here?
Well, that's a huge question, Tom, and I definitely want to get to that, especially once we know what is going to happen with the Senate, right, and Georgia. So the Georgia runoffs elections for both senators, January 5th, will really give us a huge indicator of which way tax policy will head, because we do know what Joe Biden is wanting to accomplish. Whether or not he has a friendly Senate to accomplish that is what we don't yet know. And so if we go with a blue Senate, we will know that these things will come to fruition. But before I go to that, Tom, I just want to quickly mention a couple of things that have changed this year with the CARES Act that people need to be aware of, because it does impact some things that you should do before the end of the year, before the end of this month, in fact, the calendar year. So under the CARES Act, we are able to deduct a full 100% of our AGI, our adjusted gross income. So normally on cash, you're able to deduct up to 60%, on non-cash up to 50%. CARES Act gives you 100% deduction for this year. So if you have made a lot of money during the coronavirus and you want to do a lot more charitable deductions, you can actually write off up to $100,000. The other thing is, we know, as you probably are aware, and your audience is aware, Tom, the Secure Act came out and went into effect January 1st, which basically pushed RMDs back from 70 and a half to age 72. And that affected everybody that was not 70 and a half by January 1st. Those, though, are also deferred under the CARES Act. So if you don't want to take your RMD, and you haven't heard this yet, you can skip it this year because of the CARES Act. Now, as far as Joe Biden's tax plan, we've already heard that he has said he wants to completely repeal Trump's tax plan. And what a repealing of Trump's tax plan means, if he doesn't change it, is that it would be a tax increase for everybody. Because remember, Trump's tax plan reduced every bracket by at least 2%, and it widened the brackets really a lot. So repealing that would affect everybody. But Joe Biden has said, and Kamala has said, they are not going to raise taxes on the middle class. So this means a repeal of Trump's tax plan and then some kind of adjustment, because it would in fact mean a tax raising by just repealing that. The other thing that is the greater concern for our audience here with TD is the fact that he really wants to hone in on capital gains taxes, which is really alarming to me as an investor, and something we should all be concerned about. People that make over $400,000, so $400,000 and up, and that's married filing jointly as well. So it's not like it's, $800 if it's a married couple, it's $400,000 on married filing jointly. He would like to phase out capital gains altogether and tax capital gains as ordinary income if your regular ordinary income is $400,000 and up. The thing that concerns me about that, Tom, is we've seen that before, where you start with a higher bracket so people don't worry about it, they don't freak out about it, but then it creeps down and it really eventually applies to everybody. And obviously, the ending of capital gains tax advantages is a huge problem for investors.
Yeah, and we've seen a lot of investors taking action going into the end of the year already, Rebecca. So from your standpoint, do you think that investors should start investigating this if they haven't already, because you've only got a couple weeks left here in 2020?
I am in investment management, but I also am a tax attorney. So that's why I love to talk tax with you. And I will just tell you that a 20% top capital gains rate right now, most people are in the 15%. But if you're making a lot of income, you might reach that 20% threshold. That's a beautiful tax rate, Tom, for what's coming, what I'm projecting is coming, what the CBO themselves is projecting is coming. This is the decade. Don't forget, this is the decade of everything changing. The apple cart on taxation is getting upset because we have the full retirement of the baby boomers. We have at least 65 million boomers that are still working, that are paying payroll taxes, supporting Social Security, Medicare. And that is all changing in this decade. By 2030, every last boomer will have reached full retirement age. So if you're looking at a 15% capital gains tax rate that you haven't paid a gain in forever, and you have a really low cost basis, maybe sell that position, lock in that gain, pay the tax, and get it back up now to a cost basis at fair market value. just to lock in a 15% gap gain, especially if you've been holding that position for a very long time and you have a really low basis.
Yeah, that's. I think that's pretty important, and I think a lot of investors have taken action already because we've been hearing those rumblings over the last month or so since post-election. But is this a time, and I know that you're a tax attorney also, that a lot of investors should start rebalancing or maybe taking a look at their portfolios based on the new administration that's coming in?
Absolutely. I mean, again, as far as the tax, we really are looking towards that Georgia result, and hopefully we won't have to wait days or weeks to get it, but we're really looking at that Georgia result. Of course, that's not going to happen until January, so the end of the tax year will be come and gone, which is why I wanted to mention those things that have changed this year because of CARES Act. But for sure, I mean, this is an administration that is not going to be tax friendly, in my opinion. I mean, we already know all the government programs that they've talked about. Those things have to generate revenue from somewhere, and the government only has two sources of revenue at the federal level. They have federal income tax and they have debt financing, or, basically selling our paper. So those are our only two ways. And I think, as you saw with CARES Act and all these other things, we just got $900 billion passed yesterday, additional stimulus. We have so much money that we've stimulated in this economy that we are going to have to raise taxes. So I think everyone needs to look at, the investment strategy of the companies that they're in. What are they looking at as what is their growth projection? Look at their prospectus on what's actually coming next year, because we're going into a new tax season and it's not going to be as friendly as the one we've been in.
Yes, shots fired there, Rebecca. I love the outlook there, and it's really important for a lot of our viewers out there to take heed of that. Appreciate it very much, Rebecca Walzer. She's the president of Walser Wealth Management. Thanks again.